Well, good morning and good afternoon, and welcome to the May 2025 WASDE review webinar. My name is Andy Miller with DTN. I'll be your moderator today. With me, as always, is Rhett Montgomery, lead market analyst for DTN. And during this event, real quick, all participants will be in listen-only mode. You may ask questions at any time during the event, but to do this, please click on the Q&A portion, or link, I should say, in the bottom right of your screen. This will open up a messaging panel where you can write and direct your questions to the webinar panelists, and we'll address all those questions at the end. And a reminder that we record every WASDE session, and we will post this recording up on DTN.com within the next 48 hours. That said, I'm going to turn it over to Rhett, and he will cover the latest WASDE report. Off to you, Rhett.
Thank you, Andy. Good morning, everybody. Good afternoon. Thank you for joining us here for the May edition of the WASDE report. A lot of information in this one from the USDA, so we'll go ahead and just jump right into the numbers to make sure we get through it all in a timely fashion. So starting with corn, looking at the corn balance sheet here for May, the USDA put out their first numbers for the 2025-26 season in this report. So we have two sets of estimates now, so two kind of moving targets for the USDA. I will preface this by saying that the new crop estimates, both in the both in the U.S. and on the world side of things, do carry a fairly low degree of confidence at this point. It's just not a whole lot is known about the crops. Obviously, they're still being planted in the U.S. and then in terms of South American crops, still months from being planted on their next round of soybeans and corn. So keep that in mind as we go through these. They're in no way set in stone. More than anything, just an indication of what could be to come. So with that being said, the big feature beginning with old crop 2024-25, the big feature of the changes today was another increase in corn exports by 50 million bushels this time around, brings us up to 2.6 billion bushels total estimated exports for the old crop season, which runs here through the end of August. As a result, that's cut the ending stocks estimate from 1.465 billion bushels down to 1.415, so a 50 million bushel cut there in ending stocks. Jumping to their new crop estimates, obviously the big feature on the supply side is that very large area planted number, 95.3 million acres, as indicated in the March 31st prospective plantings report. If true, that is the largest corn acreage number going back to 2013. In conjunction with that, as anticipated, the USDA using a record yield estimate, a trend line yield estimate of 181 bushels per acre, and the resulting production of 15.82 billion bushels would be a record corn production in the U.S. if true. The other side to this, though, on the demand side is where it definitely gets interesting. I will say that the average trade guess coming into this report was for an ending stocks number next year north of 2 billion bushels. As you can see, we didn't get there, 1.8 billion bushels. So in my mind, kind of a bullish twist and a bullish surprise there on the demand side. Namely, you can see going down the categories there for new crop demand, they are expecting a steady clip of exports again next year, 2.675. So expecting the demand for U.S. corn to remain very strong, 220 million bushels higher than the current year, which is a record. So if this were to come true, it would be a record supply, but also a record demand outlook. Definitely a stocks build, as you can see, going from 1.415 to 1.8, but certainly less on that new crop ending stocks than what was initially expected coming into this report. Looking at the world side of things, starting with the old crop situation here, not a whole lot of changes other than really in one country. They did give a significant increase to Brazilian corn production. The weather in Brazil through April and thus far through May was about picture perfect. Early forecasts from January and February ended up pretty much being busts. Most were expecting the wet season to end very early by the middle of April, which would have subjected a lot of that corn's pollination to very hot and dry conditions, but that just wasn't the case. It kept raining really up until on schedule. We're just now starting to see the rains taper off in Brazil. So as a result, the corn's looking very good. And they also just had more acreage than was initially thought. The corn price in Brazil in February and March just skyrocketed due to tight supply. So they, the resulting price increase really incentivized more corn acres. Looking over to the exports, though, it is notable that they are anticipating Brazil will export less corn by 1 million metric ton, down to 43 million metric tons. So of that increased production, it is anticipated that most of that will be used domestically, but they are anticipating a steady increase in ending stocks as well for Brazil. So otherwise, that's really the main feature of the world side on the old crop. It was we did get a slight reduction again in world ending stocks. So overall, not a lot of changes on the old crop side of things for the world corn. Looking at the new crop corn, so 25, 26, a couple interesting numbers here. They are estimating a higher degree of world corn production. They are notably estimating that total world corn stocks will be reduced. And this is where it kind of gets a little hairy and a little maybe convoluted, but basically they're saying that most of the reduction in the world corn stocks is going to come from China. So essentially they're calling China's corn production at 295 million metric tons, which is about even on what they did last year. But the demand in China is expected to be very, very strong for corn. And as a result, stocks are expected to reduce by 8%. So that's where you get the reduction there on the world side, including China. Whereas you look at the world less China bucket, the 95.68 right below that, that's actually a pretty steady increase from the old or from the 2024-25 situation. So essentially they're saying outside of China, who obviously owns a lot of stocks of corn, is a very large producer of corn, they're expecting an increase in world corn demand, which will be driven largely by the increase we're seeing in U.S. production. Looking at that sort of graphically, so as you can see, last year on the 2024 estimates, which is the red bar, and your new crops, the green bar, we were trending down to about 2014 or so, about a decade low in corn ending stocks, not including China. We are expecting, or the USDA is expecting, a build back in those stocks next year to put it much more in line with the preceding years, 22, 23, 24, those type of years. So 3.77 billion bushels of ending stocks of corn is the expectation for next year, not including what China has on hand. Looking at corn exports, keeping pace with 2021 is kind of the theme. 2021 is the record-setting year, which was north of 2.7 billion bushels. I believe it was, to be exact, 2.747. So 150 million bushel gap still between where the USDA is estimating this year, currently now at 2.6. But as you can see, comparing that black line to the green line, and then the red dots are kind of the projection outwards. As you can see, we spent most of the marketing season above that record-setting year. We've just recently, whether you want to call it falling back to that pace, or it's really that the 2021 had such an acceleration from March through May. So it'll be interesting to see. We're maybe starting to see into May, June, where that green line you can see really keeps its upward trajectory. That'll really be telling. If we can keep pace with that at that point, we could be in for potentially more updates from the or revisions higher from the USDA moving forward. But that being said, we are, as of May 1st, 27% above a year ago in corn shipments. The new export estimate from the USDA is accounting for a 13% increase. So still a bit of a gap there. And we'll have to see how the pace shapes out here through the really busy shipment months in May and June to see if we can keep pace with that record year. If not, as we currently are, probably on pace for the second largest as is. So. Just looking at ethanol production, left unchanged by the USDA this time around, but it is notable that ethanol margins have improved steadily. They've kind of evened out, I guess, in the last month or so, but from the lows felt in early 2025, you can see that dip on the black line at the bottom there in January, and then again in February. Kind of struggled to get off the ground there, but since then we've slipped back into positive margin and really held steady right around that 40 to 50 cent margin area. That being said, ethanol production for the year is up 3.9% from a year ago. It's been really impressive through April, where usually you see a pretty steady drop off as a result of plants taking some maintenance downtime during the planting season. It really hasn't been a significant drop off in production as compared to recent years. So definitely a good thing to see there from a corn demand standpoint. It is worth noting that corn used for ethanol is only up about 0.5%, just over. We are seeing more sorghum being used to make ethanol in recent months than probably the last year's average. We've really seen an uptick in that in the recent months. So that is, despite that increased ethanol production, it isn't exactly a 1-for-1 with the amount of corn being ground for ethanol. Looking at corn basis, ignore the noise there at the end of April. Unfortunately, this graph goes off most active futures in terms of volume, and when you're getting into the roll week, that can get kind of dicey and it chops back and forth. So if you ignore those fluctuations, you can see we rolled out of the May to July boards at around a 7 to 8 cent spread. And since then, the basis has really improved. It hasn't picked up the entire spread yet, but it's pretty close. We've firmed probably about 5 to 6 cents just in the past 2 weeks there on the corn basis. So comparing this to last year is where it gets kind of interesting. We are about 5 cents weaker on basis compared to this time last year. This time last year was a larger stocks situation as well, a higher supply. So it'll be interesting to see how this plays out in the summer. If we don't start seeing a rapid increase in the basis, then you're going to have to start thinking that perhaps the demand in some areas, maybe feed, maybe ethanol, isn't quite as strong as the USDA is estimating. But for now, I'm willing to chalk it up to maybe just some heavier commercial selling earlier in the year. But it is something we'll need to keep an eye on. As you can see, that basis, despite our stock situation, still on the weaker side, still back what I would call normal. Obviously, those top 3 lines are your very bullish years in 21, 22, 23, where we were heavy overs on basis. But something to keep an eye on here moving forward anyway in terms of corn demand. And then lastly on corn, just to keep an eye on the non-commercial position. Speculators turned into heavy sellers of corn since about February. It sold over 350,000 contracts. As of May 6th, they're sitting at just under 116,000 contracts net long yet. So still holding a bullish position, but it'll be interesting to see moving forward if they decide to completely liquidate that, or if today's findings in the WASDE maybe encourage a slight long position to be held with how strong the demand is still looking, both for old crop and new crop corn. Jumping to soybeans, again, starting with the balance sheet, looking at so beginning with the old crop situation of 24, 25, the notable change, we did get an increase in soybean exports, which has been a impressive pace, despite what some headlines would maybe have you believe since the trade war with China kicked off. But that really wasn't affecting the old crop situation really all that much. Most of our business with China at that point had been done, and we have picked up some business with some other countries. Mexico being one. We sold Mexico some soybeans just this morning on a flash sale. So we are seeing a steady pace there, and they did feel the need to increase that export figure by 25 million bushels up to 1.85, and as a result, cut the ending stocks for old crop soybeans from 375 million bushels down to 350 million bushels. Looking at the new crop side of things, I think is where it's really intriguing and bullish for soybeans. So basically, using that 83.5 million acre number from March, the lowest acreage number going back to 2020 through, and they are using a record soybean yield as well. Their trend line yield of 52.5 would beat the record by a half a bushel going back to 2016, 2017. So as a result, 4,340 bushels of soybean production is a reduction slightly from 2024's harvest. And then where it gets really interesting is on the demand. There again, the USDA is being very bullish on demand. The crush number of 2.49 billion bushels would be another record. There's really no reason at this point to believe otherwise. In my mind, we just keep setting crush records year in and year out. So really no reason to expect different next year. And then you can see the export number, definitely a bullish number with the current dispute with China. Obviously, the news coming out of Switzerland over the weekend is a definite step in the right direction towards some sort of agreement with China. So a good thing here to see that, we are expecting a slight reduction in export demand, but nothing really overly significant. So as a result, expecting a drawdown in stocks to 295 million bushels down from 350. To me, this is a very bullish outlook right now, because basically what the USDA is saying is we're going to be potentially reliant on a record yield, which the USDA is running a 3-year streak on overestimating the final yield in the May WASDE on soybeans. So to me, it's going to signal to a lot of traders that, they're going to be the first sign of any weather issue, or it's going to have a significant amount of risk premium built into this market, in my mind, to reflect this current balance sheet. Obviously, the demand will be up in the air depending on how negotiations with China go, and we could see an increase in acreage yet as well if some producers decided to roll the dice on soybeans, anticipating a situation like this. So definitely something to keep an eye on. But yeah, as of right now, new crop soybeans are up 25 cents on the November 2025 board. So definitely being construed as a bullish set of figures here on the soybean side of things. Looking at the world situation for the old crop. Oh, I apologize. I missed updating my years there. This is actually 24-25. As you can see, Brazil and Argentina were left alone here. I thought the USDA may increase those, but maybe wanting to wait a little bit to get more of the harvest behind in Brazil before looking at that again. The early reports or the late reports, I guess, for Brazil soybeans as they kind of settle out their harvest have been, just very impressive in terms of just keep pushing that record yield further and further and on the local estimates down there. But obviously the USDA is seeing something that want to keep them holding a pat for now. So the other big change on the old crop, they are expecting slightly less demand out of China. They cut the Chinese imports of beans by 1 million metric ton. And then they basically took that directly out of Brazil, cut the Brazilian exports from over 105 million metric tons, now 104. Still a record export number for Brazil if true, but are trimming that backwards just on less demand anticipated out of China. Looking at the new crops side of things, again, this is for 2025-26. Missed updating my years there, so apologize for that. But basically, expecting, the big number here that jumps out is that Brazilian number, expecting another record year out of Brazil at 175 million metric tons. And they're passing that, a lot of that increased production right into export potential. Looking at China, Brazil to China is 112 imports to 112 exports. Obviously, the calendar years don't line up, so there'll still be some reliance on the U.S. to fill that gap. But definitely a large situation on the world side if this comes true. I will say some local estimates are painting a picture different than this on some of the things I've read from some local state agencies down in Brazil are expecting potentially less acreage in some areas next year and are lower on production. But again, we're a long ways out from that, still months away from the planting discussion even. So as a result, the ending stocks there for world soybeans for next year expected to be 124.33. That's roughly in the neighborhood of what we're currently doing for this year. Just slightly higher, about 1 million metric ton higher is also, all things considered, could be much more bearish given that Brazilian number, but they are expecting a steady increase in crush demand across the world. Looking at U.S. soybean exports, kind of an interesting year for soybean exports. As mentioned, the USDA increased their estimate by 25 million bushels in this morning's report. Basically, I've on the map there, I've put arrows that, what are kind of major shifts in performance that you'd expect in an average year. So essentially, you expect your first kind of slowing of sales or of shipments, excuse me, to take place in the late, part of the calendar year. We kind of just ignored that this year. We just kept on shipping beans. Unfortunately, we where you usually expect around March, that third arrow, you expect another shift, kind of a slowing of the pace. That came about 2 months early for the U.S. this year, as indicated by the downward second arrow. But as you can see, the initial fear was that we'd get to that third arrow and then have another drop as Brazilian and Argentine beans came to port. But we really haven't. Despite a record large production in Brazil, U.S. offers have remained really competitive on the world stage. Obviously not to China with how high the tariffs got, but in terms of world demand, for a while there it was very close. Like within like $10 a metric ton or something of each other on offers for Brazilian beans and U.S. beans, excuse me. So that's kept the U.S. business really steady from March until now in early May. What we'll keep an eye on is that fourth arrow. As you can see, we usually have a strong finish to export years. Usually in July and August, you see a late surge in shipments. So if we can, follow the green shaded area's path, you can see we'll be right on pace to hit that USDA goal. It'll be now that they've increased it, it'll be very close, and every week's going to matter here moving forward for exports of soybeans. But definitely things are looking good based on this chart as it currently sits. U.S. crush, just quickly, again, it's a record for this old crop year, and it's forecasted to be a record for next year. And as you can see, through the marketing season thus far, we've only had 1 year where we dipped below the previous several years, which was in February. We fell back below 23-24's year, just slightly, as we had some some slippage in the products market. The margins got a little dicey there in a second, as well as some cold temperatures in some areas across some weeks. Definitely, I think ate into some productivity over that month, but we rebounded, excuse me, very nicely in March. And as you can see, if we keep the normal pattern, should have no problem hitting that USDA estimate or very close, and should go very easily to get to a record. Whether that is the USDA estimate or slightly less, will still be a record production for soybean crush in the U.S. in 24 and 25. Looking at soybean basis here, kind of the same story as corn, maybe even a little stronger action. We've just seen a very impressive rally in basis since the roll from the May to July. It's pretty much picked up all that and then some of that spread. We're now sitting at 52 cents below the July board, about 10 cents firmer on basis than we were this time last year, which as compared to corn, this one makes a lot more intuitive sense when you look at where we were on stocks last year to where we are in stocks this year. So definitely it, like I said, makes sense looking at this that given the strong crush demand, that you'd see the basis adjusting to a intuitively area that makes sense given the strong domestic demand for soybeans. We are obviously below the 5-year average, which is that green line. But again, those 2021, 2022 years up there are kind of outlier years where we are very short on soybeans in the countryside and had very strong basis summers. Looking at non-commercials for soybeans, they are holding a bullish bet currently on soybeans as compared to the recent action in corn. They've actually been, pretty steady buyers of soybeans. Just under 50,000 contracts as of May 6th. That is they have returned to buying too since these numbers came out. So we're likely challenging a move back towards the previous peak. But that is the largest long position for non-commercial traders going back to late 2023. So it will be very interesting here as we go into the growing season to see, again, on any kind of weather event, we'll see if these non-commercials decide to even take even larger bullish bets. As if today's price changes are any indication, it's definitely a buying day. So expect here on Friday to see maybe not this Friday, but the next Fridays, since there's a lag in the CFTC data, to see a reflection of that bullish sentiment among non-commercial traders. Jumping to wheat here, U.S. wheat estimates, starting with the old crop, did get a 5 million bushel decrease in ending stocks to 841 million bushels. We are an increase in food demand was how they arrived at that. It was a semi-bullish thing to see them keep the old crop exports number the same. I thought they could potentially reduce that, but we are sitting down with less than a month to go, and we are lagging behind that pace somewhat. So we'll keep an eye on that, but for now, keeping that number basically steady with a slight cut. Jumping into new crop, the 45.4 million acres of wheat is the second lowest since 1919, if true, when the records began in 1919. Obviously, before that, you've probably had lesser numbers, but since the USDA record keeping started, they are keeping that 51.6 bushels per acre is a very stout yield estimate. That's a bushel and a half increase from their estimate in February, I believe. And if it's true, I believe it'll be the largest wheat yield going back to 2019, 2020. Oh no, 2019, excuse me. 2019 would be the last time we had a wheat yield larger than that, which was 51.7 bushels per acre, I believe. So definitely seeing the recent rains across the southern plains and really across the entire U.S., but a focus in the southern plains is definitely a reason to be pretty stout on their production estimates, as we'll look into in more detail shortly. But basically going down The big demand hit is they are expecting a drop in exports again next year um, as a result of the strong yield and a slight reduction in wheat demand. They are expecting a stocks build up to over 900 million bushels of wheat. So that was larger than traders were expecting coming into this report. That would be the largest wheat stocks number going back to 2019, 2020. So definitely a little bit on the bearish side there in terms of wheat stocks. Looking at the world wheat numbers for 2025, 26, as you can see, the flat line or the bottom line, world ending stocks of 265.73 million metric tons is basically flat year over year. That is higher than what traders were anticipating. Traders were expecting a number closer to 260 million metric tons. Again, the market isn't overly sensitive to that number, just because it's it's hard to pencil down the whole wheat market in the world to one number because it's such a timely market with wheat being grown everywhere at some point in the world. So you have such a stagger of supply and demand. But really, to me, the bearish side of this is the leftward and bottom box across some of those production estimates are very stout. Notably, Russia, 83 million metric tons of wheat production would be an increase over what they did in 2024. That's quite a bit higher than some of the private analysts. I believe like Sobicon is like 79 and a half. So they did increase theirs slightly, I believe, in their last update, but definitely a far cry below what the USDA is seeing things currently. And then the other thing to keep an eye on is China. China is having a very dry last month to 2 months for their major wheat growing areas. Obviously, they've turned back to not being a very large importer of wheat, but that could certainly change. They're a huge user of wheat, so it'll be something to keep an eye on moving forward. 142 million metric tons is an increase in production from last year, if true, with some tough weather currently. So, but if there was to be no change in that, then that number is potentially on the upper end of what we could possibly expect to see by the time we get harvest is all said and done here in the summer. Switching back to the U.S., just to look at a state-by-state breakdown, really what jumps out right away is Kansas at 345 million bushels of wheat, of hard red production, or total winter wheat production, I should say, rather. A sizable increase over the 2024 production of 307 million bushels. And then looking down across those major states that I included, you can see Washington expected to have a stronger year, good crop in Montana. And really, I didn't include the soft red wheat areas, but pretty solid expectations for crops in Illinois, Michigan, Indiana, Ohio as well. So, but really, in terms of looking at the bottom line, it's really Kansas that's driving everything. South Dakota and Nebraska are reductions from last year, and so is Texas. But Kansas currently is seen as more than making up for that, obviously benefited by the recent rains they've got on that side of things. Looking at the exact figures here, winter wheat is 1.382 billion bushels versus 1.349 a year ago. Breaking down that by category, expecting increases across all three major winter wheat categories. This was definitely a bearish shot to the market. The trade was actually expecting reductions across all three of these categories. Just didn't occur this time, mainly due to that very strong yield estimate that the USDA put out. The acreage number that obviously is historically low was leading many to believe that we'd see reductions here, but as the USDA currently sees it, expecting to have steady to slightly higher winter wheat production on a slightly lower acreage number. Looking ahead to U.S. Wheat exports, this is just a quick graph that shows where our, and I got my colors backwards on my legend, but basically the red line here is a look at your 5-year average commitments of what you'd expect to be sold and shipped over a 2-year span. Basically, what I've done with the green line is just taken the 25-26 season. Obviously, we don't have any shipments because we're not in that marketing year yet. But as you can see, we are holding, just slightly above what you'd expect for sales within that window. The 5-year average exports in the U.S. for wheat is 815 million bushels. The USDA is expecting 800 million bushels. So obviously, we have a long ways to go. Not a super high degree of accuracy at this point with any of these estimates, but we'll say, given just the pace of sales so far, we are looking in pretty good shape to hit that USDA number. But again, that can all change and will be very derivative of what happens with production. So, but something to keep an eye on here in terms of it seems to be the export demand is the kind of the wild card in the wheat fundamental picture. Domestic use is fairly steady year in and year out. What can really make or break your demand situation is what you end up exporting. So thus far, a pretty good shape, but obviously a long ways to go. And then looking at non-commercials for wheat, this is a combined chart that looks at Chicago, Minneapolis, and Kansas City markets. And as you can see, the last several weeks of these traders have just piled into short positions, drove that short position to a record back in late March. And then they started to buy a little bit and then turned right back into sellers and sent it even farther down to a record, almost hitting north of 190,000 contracts short. They did turn back into buyers slightly last week, but pretty much flat, as you can see by the blue lines there. Really, it'll be, I think, a weather game at this point, but I will say most people would look at this and think it as a definite bearish scenario. But when you start to get this short, it definitely does leave the market exposed as well to if something bullish were to happen, whether it be, weather or weather in the U.S. or weather in the world markets, China and the Black Sea included. When you get this short, it definitely leaves the market exposed to a buying spree, which could definitely send futures higher if something were to spark some buying and some short covering among these non-commercial traders. But for now, anyway, they're sticking with their short positions until they're likely watching the forecast, which again have been very friendly for wheat production over the last several weeks. Just to wrap everything up, corn, I see it as neutral to perhaps slightly bullish, maybe leaning more towards the neutral on that. They did reduce stocks on higher exports for old crop. New crop 2025-26 U.S. stocks were large, but less than expected, about over 200 million bushels less than the average trade guess coming into the report. So perhaps a bit of a bullish surprise there. Then larger world corn production is expected moving forward, and that's beginning with Brazil yet in 2025, a 4 million metric ton increase there in Brazilian corn production. Soybeans, I see it as bullish. We did get a reduction on old crop stocks, on higher exports. Stocks are expected to decline in 2025-26 on the low acreage, and that decline is coming despite the usage of a record yield by the USDA in this morning's WASDE. So pending the weather, definitely I believe a bullish starting point for the soybeans to finish out this old crop year and looking into 25-26. Wheat, I'm leaning towards the bearish side, mainly stemming from very large 2025-26 production estimates across the globe, beginning with the U.S. and then obviously large estimates compared to what the weather maybe would have suggested in both China and Russia. So Definitely something to keep an eye on. The weather will probably be the most important thing here for wheat as we finish out May. There's still some potential in the forecast for rains to get kind of scattered again, which, we've seen a good reversal in the drought area in the U.S., but certainly don't have the soil moisture profiles to have the rains completely shut off. So something to keep an eye on here as we move deeper into the growing season and closer to the wheat harvest in the U.S. on the winter wheat side of things. So with that, the next WASDE is June 12th. And with that, we'll take some questions.
Well, you've done just a wonderful job, Rhett. There were no questions that came in, which means you just covered everything perfectly. But I did want to ask you one thing, because really this is the news of the day, which is the parent deal between the U.S. and China on reduced tariffs. In fact, there may be some people on this call that aren't aware of that, but it looks like they reduced, at least from what the U.S. pays down to, I think, only 10%, and China's down to 30% coming into the U.S. So, any initial gut reaction to that from your perspective related to the markets?
Yeah, so I think even before this WASDE report came out, we were trading higher by double digits on the soybeans for most of the morning. So I think the soybean market definitely liked the news. To look at the macroeconomics, they're really loving the news. I mean, the Dow Jones right now is up over 1,000 points. I think it kind of exceeded anyone's expectations. The bar was set fairly low going into these meetings over the weekend. I think most just wanted to see, any sort of positive out of it, whether it's we're going to talk again in a month or just a step in the right direction. So the fact that they came out of those meetings with, like you said, significantly reduced tariffs, the U.S., like you said, down to a 10% tariff on exports into China, and the U.S. agreed to reduce our tariff on China from 145% down to 30%. And that's a misleading number as well, because it's a 10% reciprocal tariff, but a 20% is still added on for the fentanyl crisis, the initial 20% that President Trump put in place back in February or so. So it's kind of misleading there, and you got to think they're going to keep talking about that fentanyl issue, because China has kind of, from the sounds of it, zeroed in on that as a place where they feel they can, appease President Trump and the current administration to maybe reach some sort of agreement. So I think it's very optimistic what we got out of the weekend. I think it was better than most expected, and the fact that they're going to start talking again here in a week or two, from the sounds of it, is definitely a step in the right direction, and in combination with these, especially on the soybean side, these soybean estimates, keeping the export demand up, really eating into those new crop stocks, with a pretty strong export number, still expecting China to continue to be a big buyer of U.S. beans.
Awesome. All right. Well, no other questions came in, so we'll call it a day. I do want to thank everybody for joining the conference call today, the webinar today. As a reminder, this has been recorded, and we'll have a rebroadcast link up on dtn.com within the next 48 hours. And then Rhett has graciously put his contact information here if you'd like to reach out and continue the conversation. That said, I'll conclude our event, and I'll just thank everybody one more time for joining, and hope everybody has a great day.